Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now the crypto market is pumping immediately after the new CPI inflation numbers were released, because these new numbers came in a lot lower than expectations, which is extremely bullish for markets. And so in just a moment, I'll be talking more about that. And of course, later in this video, I'll be talking about how Ethereum is currently potentially reclaiming a significant price level on the chart while its supply turns deflationary. Once again, more on that later in the video. Definitely stick around. First of all, we need to talk about the new CPI inflation numbers that were just released a few hours ago, because these numbers came in a lot lower than expectations. If you watched my last video on this channel, then you should know that expectations were at around 8%. The majority were expecting around 8% year over year, but instead CPI inflation came in at 7.7% year over year, which once again is below expectations, and this is bullish for markets. And now, if you're new to this channel and you want to know why this inflation number is bullish for markets, then watch my last 1 to 2 videos here on the channel, because in those previous videos, I explained in much more detail why a number below 8% would pump markets as soon as that number gets released. And that's obviously exactly what happened as soon as this bullish number got released. And now, obviously, inflation still has a lot further to fall, because it's meant to be around 2% roughly. So 7.7% is still a lot higher than where it's meant to be. But with that being said, this is still a fairly significant drop compared to last month. So at least we're heading in the right direction. And due to this recent drop off in the US inflation rate, we've begun to see the futures market price in more of a 50 basis point hike compared to a 75 basis point hike at the next Fed meeting, which happens on December 14th, so next month. And specifically, around 80% of the market is expecting a 50 basis point hike after the recent inflation numbers just got released, and around 20% of the market is expecting a 75 basis point hike at the next Fed meeting in December once again. And now, if you look at the probabilities chart for all of the next Fed meetings over the next 1 year or so, what we're seeing right now, based on what the majority in the futures market is currently pricing in, is that the federal funds rate is now set to peak at 5% or 500 basis points during the March 2023 Fed meeting. And the reason why this is a big deal is because just before the latest CPI number was released, the futures market was pricing in for the federal funds rate to peak at 525 basis points or 5.25%. And basically, the market was pricing in for the federal funds rate to not come back down until the very end of next year. So basically, the market was expecting the federal funds rate to be held at around 5.25% for most of next year. But now, just after we got those good CPI numbers, those lower than expected CPI numbers, the market is bouncing because the futures market is currently pricing in for the federal funds rate to once again peak at 5% instead of 5.25%. And instead of remaining at those high levels for most of next year, they're now expecting rate cuts to begin around September or even July next year. So basically, because of the latest US CPI inflation numbers, the market expectations for the federal funds rates have changed in the more bullish direction, because they've basically moved the future Fed pivot forward closer to the present day. And in case you're new to all of this and you don't know what a Fed pivot is or why a Fed pivot is important for markets, it's because, first of all, the last 2 bearish to bullish Fed pivots marked the bottom of markets. And in case you're wondering when those last 2 Fed pivots actually happened, one happened in December 2018, which marked the bottom for both stocks and crypto, and another significant Fed pivot happened in March 2020, which marked the bottom for stocks and crypto. And on top of that, one of the biggest reasons, not the only reason, but one of the biggest reasons as to why the bond market has collapsed over the last 1 year, the stock market has crashed over the last 1 year, and the crypto market has crashed over the last 1 year year is due to the Fed performing quantitative tightening and hiking interest rates, which is very bearish for markets. And so basically, when the Fed eventually gets to the point where they lower interest rates again and start printing money, that will obviously be extremely bullish for markets, kind of like what we saw in the first half of 2019 and in late 2020. You can check the charts for yourself and see what's happened during those time periods just after a Fed pivot, which, by the way, the next Fed pivot is set to happen next year. But anyway, now getting into the Bitcoin part of this video. This right here is the Bitcoin to US dollar chart on the 4-hour time frame, just to quickly show you obviously what happened immediately after the new CPI numbers were released. And this is why it is extremely important to follow me over on Twitter, because obviously if you got that tweet, which was as soon as the numbers got released, then this was a fairly easy trade to take. But anyway, despite today's very good news and obviously this short-term bullish price action playing out right now, unfortunately, at least at the time of recording this video, on the daily time frame, this has not changed the trend. Clearly, the trend as of right now, at least, is still pointing in the bearish direction. And in order for me to start getting more bullish in terms of the trend on the daily time frame, I'd like to see at least some higher lows form on the chart, or if we see a lower low, at least I would like to see a bullish divergence form on the charts. And as of right now, we're just simply too early to tell if any sort of trend is changing as of right now. So technically, we're still in this bearish trend on the daily time frame. But at the time of recording this video, the price of Bitcoin is currently testing an important level on the chart, which is of course this previous June low, which is sitting at around 17.5 to 17.6k approximately. And so technically speaking, that will be an important level on the chart for the price to break back above if we have any chance of flipping more bullish again on the daily time frame. But if that flips into resistance and instead we get a rejection from around 17.5k, then that would be just another bearish confirmation signal in terms of the trend on the daily time frame. And obviously this bounce in the price of Bitcoin is coming at a good time because the daily Bitcoin RSI just recently entered into oversold territories for the first time since around the end of August. And before that, the last time the daily Bitcoin RSI entered into oversold territories was all the way back here during June. And so generally speaking, this usually happens at a time where we're at least some sort of short-term bottom, some sort of local low. Once again, this does not necessarily mean we're at the bottom for the entire downtrend, but potentially at some sort of short-term bottom for the time being. And typically what we see after a sharp drop like this in the price of Bitcoin is some time for the price to stabilize in some more choppy sideways price action like this, for example. So I wouldn't be surprised if we see that for a little longer on the daily time frame, potentially over the next few days, maybe over the next week. But anyway, zooming out to the weekly Bitcoin chart, and obviously we're getting a bounce from that 50% retracement level, which was sitting at around $16,000 per Bitcoin. And in fact, while we're here on the weekly time frame, taking a look at the weekly Bitcoin RSI, which right now is potentially forming a massive bullish divergence, which is an extremely rare signal on the weekly time frame. We almost never see a bullish divergence on the weekly Bitcoin chart. And now it is important to mention that at least as of right now, this signal has not yet been confirmed, because first of all, we need to see this weekly candle close in a lower low, while the RSI is sitting in a higher low, which as of right now is looking likely, considering there's only around 3 days left for this weekly candle close. But then after that, we would then need to see at least one green weekly candle confirm with a weekly candle close. So basically, it's not until at least 1.5 weeks from now at a minimum for this potential bullish divergence to potentially confirm. And obviously, I'll keep you updated on this chart moving forward in these videos. And if it does confirm, this will be a big deal for markets, technically speaking, because once again, this is an extremely rare signal to see on the weekly time frame for Bitcoin. And technically speaking, a bullish divergence means that we're due to see reduced bullish momentum, which normally plays out in the form of either sideways price action or more of a recovery in the price. But anyway, now getting into the Ethereum part of this video. This right here is the daily Ethereum to US dollar chart, and right now the price of ETH is potentially reclaiming this important level on the chart. And I say potentially because we still need to see this daily candle close. And in case you're wondering, this level right here is sitting at around 1250, and back here during June and July, this was acting as strong resistance for the price of ETH. And then over here during around September, October, this was acting acting as strong support for the price of ETH. So obviously this level historically has had a lot of significance, and it would technically be a bullish confirmation signal if we see a daily candle close back above that level, because this would essentially put the price of ETH back in this previous price range that we were sitting in during September and October. But once again, just like I said earlier for Bitcoin on the daily time frame, technically speaking, we have more bearish indications still in terms of the trend as of right now. So technically the trend on the daily time frame is still more bearish than bullish, because for example, we've only just recently made lower lows and we're yet to form another higher low or higher high on the daily time frame. And in terms of the daily Ethereum price oscillators, right now the daily Ethereum RSI is potentially retesting this previous upwards trending line of support. So if the RSI breaks this level back to the upside, yes, that would be another bullish confirmation signal pointing towards a possible bullish trend reversal already. But obviously, as of recording this video, this has not yet happened in the daily Ethereum RSI, which technically means as of right now, we are still more bearish than bullish in terms of the trend on the daily time frame. And if you're looking at the daily Ethereum MACD, this is still currently trending to the downside with the histogram still sitting in the red. But of course, if we see eventually another bullish cross, that will eventually be another bullish confirmation signal. But as of right now, that hasn't happened just yet. And as for potential points of resistance to watch out for on the daily Ethereum to US dollar chart, we could have some resistance at the 38.2% Fibonacci level of resistance sitting at around 1370. But if the price of ETH confirms a breakback above around 1370, then I'll be looking closer towards around 1470, then around 1.6k, which is where the golden pocket is sitting at, and that is also where this previous high is sitting at. And as for some Fibonacci levels of support, right here, we recently bounced very close to the 78.6% Fibonacci level, which was sitting at around 1050, but we actually bounced from around 1060, so once again, very close. And considering the price of ETH is trading back above this golden pocket, as of right now, that is the current important level of support to pay attention to on the daily time frame, which is sitting in between around 1180 and around 1210. And just before wrapping up this video, I'll quickly mention that the price of ETH just turned deflationary since the merge, because ever since the Ethereum merge around 56 days ago, where Ethereum moved from proof of work to proof of stake, the supply of ETH has dropped by over 5,000 ETH. And this deflation happening right now in the supply of ETH is actually accelerating more recently. And this is due to a large increase in on-chain Ethereum transactions for both ETH and ERC20 tokens. And obviously, this is happening more recently due to the whole FTX situation, because billions of dollars were withdrawn from FTX before they stopped withdrawals. And obviously, a lot of those withdrawals would have been on the Ethereum blockchain for ERC20 tokens. And in case you're new to all of this and you have no idea why the supply of ETH even goes down in the first place, it's because in every single Ethereum block, as a result of EIP 1559, which was an upgrade to Ethereum that happened during August last year, a large amount of Ethereum transaction fees are basically burned pretty much every Ethereum block. And so if there's more and more transactions happening on the Ethereum network, that essentially increases transaction fees and increases the amount of ETH that is getting burned, which turns Ethereum even more deflationary, which is basically what's happening right now. But anyway, if you want to know how to maximize your profits in crypto during a pump like this, or even when the price is dumping or simply chopping around sideways, then make sure to check out these videos popping up right here on your screen. The video in the top left of your screen shows you how to make money during a crypto pump or a crypto dump, and the video in the bottom left of your screen shows you how to make money in crypto when the price is chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.